Good morning, everyone. Welcome to the London session on Topstep. I see that some people are asking about metals. I think we might be in for a pullback. So let's do like a top-down approach to see exactly what's going on from that bird's eye view. I'm using my charting platform MetaTrader 5 via AMP Futures that uses CQG data. I like CQG data because it's one of the most reliable data feeds in the industry, so that's been my staple for many years now. All right, so weekly chart. See if you can see that. Yeah, so weekly chart does have some development in there lower down. Like we have some demands that are sitting. This is copper, by the way. So I've been trading copper during London. It's not like the fastest, but it's it's acceptable. So demand level on the weekly chart is at 387.32. So quite a bit lower down. And right now, I don't really have anything else that would tell me that we are in any sort of a solid reversal. If you look on the volume profile, which is this histogram on the right-hand side, we're sitting in this like little low volume node. And that can be an indication of an area that wasn't really traded much. So it can sometimes cause a reversal. Now, whether we get it for the London session, that's a whole different picture. There is a little bit of sell-off coming in. Let's have a look at the daily chart. See whether that can provide us with more clues. So this area is the formal low that was broken in July. Now, Thursday, is this Thursday? Friday. So on Friday, we touched that area and immediately smacked it down. So we'll see whether the same happens again. But usually these areas tend to get about 2 or 3 tests on these larger time frames before they get broken to the opposite side. So yeah, this is still telling me that maybe a fade of the move could be on the cards. This is now a 4-hour chart. This whole area is one big range. So if you look at how the price behaved, just purely from highs and lows, not even looking at any sort of granular supply and demand areas, this whole area was the top. We then fell away from it, established a bottom, and then moved away from it yet again. And we keep doing that. So I'm going to see if I can match some other things in the profile intraday to give us a more granular view into what's going on. All right, so looking at how Asia traded, I do have this set for Shanghai hours, which starts a little bit later than Tokyo, and typically Shanghai Exchange tends to have quite a lot of action in it. So just looking at the move that resulted from breaking the top of Asia, so in between London and Asia, it went up, didn't it? But it kind of moved away too much from VWAP as well. The overnight VWAP, sorry, somewhat. This is what happens when someone knocks on the door and you live in a multi-dog household. They just go batshit. So yeah. So we've moved away quite far from VWAP. This is the overnight VWAP that I use to kind of just very simply gauge where we are in relation to the average volumes that were done. So even this is telling me that a fade could be a better option here. There's some single prints that were created. There was a value acceptance, but because the value area from Friday's London is in this top of the range, it sort of minimizes the value of it, if that makes sense. And what do I mean by that? Well, if something is at the top of the range, and it's not really doing a very good job, just really going up and up and up, because as you see, this is some committed selling here. Every time you have a selling wick or even a buying wick, that's institutions looking to do something with that area. So that means that sellers have stepped in with some deep pockets, and we shouldn't really ignore that. So to me, there's a little bit of conflicting information there. And one thing that I want to see is this single print fade back down to the initial balance. Now, initial balance high is sat at 403.49. And the initial balance low is 401.53. So that's the first hour of London. I rarely take any trades during the initial balance because I want to see those other time frame participants, the institutions, stepping in before I decide what I'm going to do with it. And every time I've tried to step away from that, my results are not as consistent, because there's a lot of stuff that market makers do that isn't that smooth. It's not that liquid. And yeah, so I'm just gonna have a look at my other charts here. Now, looking at, I know some of you asked me about NQ and stuff, so I did, I do watch it because a lot of my traders that I coach do trade NQ. It's still a little gappy, right? Still a bit gappy. So I'm just trying to get the overall picture, not just looking at like a singular, metals chart or just one equity chart, but just kind of looking across the board. What do we have as potential market sentiment? And so far, NQ looks like it tried to go above the Asia range and is currently failing to advance further. It didn't even extend the initial balance so far, starting to build structure. And even NQ does have some interesting areas on the volume profile. So yeah, that could be something in there. So copper is continuing to push a little bit higher into this low volume node and previous low. That was broken last week. So for now, there's not much for me to do here. Like, there's no setup yet. We need to see some committed selling that doesn't kind of keep trying to push into this formal area. But this is definitely where I would like to see a short at some point. And then we'll see, if we break through that, we can have some new information. If we go higher, sometimes if you go past the value area and then break through it, you might use the test of the former value edge as an entry. So there's always a way to figure out how to position yourself. But yeah, so I would say equities so far might be a bit short. And DAX is doing the same thing. In fact, DAX is about to, oh, it actually popped its initial balance to the downside. So this is DAX. I know we don't have it yet on Topstep X, but we will at some point. Now DAX has the London session as its main session, and the reason why I like to look at it for any kind of sentiment is because it tends to be sometimes a catalyst for some of the other equities during London, and then that relationship sort of flips and changes as we go into the New York session. And then ES becomes kind of the main driver on a lot of the days. So those are some of the basic correlations that I like to use when I'm trying to get the overall picture for where we are, how price is doing. And I can see we wagged around the Tokyo area. So Asia low got broken, Asia high got broken. So that's not really that lively, and in fact it might bring us into a neutral sort of day type. So right now DAX not really looking that great for momentum trades. And if you were going to do anything, I wrote some of the high posts here before, but I'm actually thinking now the first one should be maybe a neutral day fade from London value. That would become my first choice. And that's kind of the same as this value high reversal, because I wrote that very early. Now if we start to break down, there's a potential for value short, and then we'll see if some of the other equities can get dragged down with it. But for now, again, everything is starting a little bit slower this morning, especially in equities. Right, so we're getting a bit of selling in copper. Let's have a look at some questions. Michelle Ryan says, Dee, could we at some point look to create the levels for copper and then add them to Topstep levels indicator? It would be great if we could do this weekly as a group and then see them on the system. Yeah, I mean, me creating levels ahead of the market generated information is very difficult, because the way I trade, whilst I do have some levels that are sort of like general reversal, potentially reversal points like this former low, you should be able to get some of that already. Let me just check that actually before I before I yap. Let me check that. That might be something. Okay, so interestingly, I mean, they have some generalized levels like last week's high, yesterday's high, but for some reason they're not, oh, hold on, let me change this. Yeah, they haven't been enabled for copper. So one thing that you might want to do is to ask them to enable just generalized levels first on copper, and then we can maybe look to populate that elsewhere. Coach Jay is, I think, probably better than me at bringing you some more other time frame levels as orientation points, because a lot of my levels, they don't even come in until like the market actually starts trading. Things like the value areas from yesterday, or things like the initial balance high and low, low volume nodes, like none of that really becomes available before the session begins. And that's one of the reasons why, I don't really get involved much in, in putting the levels out, because I don't have them, and also something like the average session range, it doesn't even kick in until the session starts, and then sort of develops for the first 10, 15, 30 minutes. And then, we can start to see where the market is creating the highs and lows on the session, and it starts to plot the average session range, which can also move throughout the day. It is a dynamic measure. So that's a little bit tricky with the way that I trade. But yeah, maybe we can just ask them to do levels that are there already. So previous week's high, previous week's low, settlement and all of that. Michael Bruneman says, are there any indicators of a direction if on a daily basis, e.g. copper, the high of the previous day was not taken out by a few ticks instead of when it was taken and then turned? The whole point about a level being a zone means that you can't really be that granular with it. Like, the whole point is to look at the level and see how price behaves around it. Like, for example, right now, I see some conflicting information, right? So we have a potentially broken low from the previous weeks that has been acting as resistance. But at the moment, even though we've penetrated into that level, there is not much commitment either side. So they can either take it straight through, because these, areas of lower volumes, that's what they are. They are areas that can just either completely reject the price, or they run the price through it really quickly. So, but, either or happens generally reasonably fast. So right now we've gone inside it. So it's like, does that mean that we're going higher because we've sort of taken out, the effectively a single prints by a few ticks? Does that mean that we go higher? Well, no, because for now we have some selling there. So we need more information to find out whether this is actually going to be there or not. And then also the whole, whether something breaks the high or not. For now, we're holding the high, but again, everything is a zone. And if it breaks it by a few ticks and still reverses, or even if it breaks it by a few ticks, reverses, then carries on through it, that's all a possibility, right? So I'm not really in favor of looking at it as like, we broke it by 3 ticks, therefore this is now resistance. Because, these levels will be reactive. Every time a somewhat of a major area gets smacked through, there's bound to be some reaction around it, and usually it's to the opposite side, but that doesn't give you any further information. You need to see where the price sustains after that first event, and then you might have something. So this is why, I like to wait. I want to see exactly what they're doing there. Right now it's not very clear what they're doing. There's some selling, but they kind of keep pushing into it. I don't really like that. And even though it held for now, I still have those single prints left on the profile, right? So TPO profile is still telling me that we're keeping the price above the initial balance today, and that will be contradictory to me using this zone as a reversal. Does that make sense? Because you have to have everything lining up. You cannot have single prints and, effectively a strong auction, and then just kind of pretend that that's not happening and just go, I'm going to short it anyway. I would prefer to see a failed auction or an auction fade back to initial balance, so that I know that whoever bought on the way up, all the way through the last sort of couple of hours, that they're not there anymore. And they're like, well, we're not interested, we're pulling our orders, and, we're going to go have coffee. So until that happens, this is all conflicting information. Furthermore, I actually have the ADR high above this entire area. So I actually have it at 405.69. And if we get there, even though we've kind of gone through this little zone that I marked, and at that point we would have gone through the London high from Friday, it would still be a potential reversal point, because you're reaching sort of the extreme of the day's range. And at that point, unless we completely ignore it, keep going higher, it's a little bit dangerous to keep going long into ADR high because you're in danger of buying the top. We don't want to be doing that. So again, just staying patient until something is super obvious, like an eyesore, and we're definitely either returning back to the initial balance. I mean, you can front run a trade with a small order, right? If you have an idea, you can just go, I'm going to go short here, and then see whether we get some more commitment to the downside. And then when you get that second signal, that is an unequivocal, trigger point that, yes, this is what we're seeing, you can then add into a trade to make up your full position. But just don't don't go full position, don't go like one lot and then double up to two lots. That's not what we're trying to do here. If you're front running a trade, it always has to be done with a smaller size. All right, so while we're waiting, what percentage of the bell curve is your value area on the CL? Across the board, my value area is calculated at 70%. I know that it should be like 68 point whatever, but I found that 70% works just as well. So, it will be maybe a few ticks difference. And for that matter, even the non-TPO value area, so the volume value, it's pretty similar to the TPO value. Now, one of the reasons why I prefer the TPOs for intraday movement is because you get more granularity. So you have single prints, you have, a whole bunch of other things, failed auction, blah, blah, blah. It's easier to see intraday development on the TPO profile. At least it is to me. But I do use the volume profile for larger time frames. So here you can see that we are still in, this is a 3-week volume value. So volume profile with the value area sort of in this light blue. And what that means is that we're still in range effectively. So we created some balance in this whole area, and we're now kind of just inside it towards the lower end and effectively attempting to spend time there, which could mean acceptance of higher prices. So if this goes higher, this is then going to be opportunity for longs, not shorts. And for now, as this day is kind of developing more, I have single prints. I have value acceptance from the TPO London Friday area. I have, price hanging above initial balance. That's all for me bullish right now. So even though we have this area, I would still be thinking maybe longs would be better. So if we get a pullback at some point today, might not be a bad idea to actually run a long through this area. I mean, if you want to run a scalp, that would be an option as well. But for scalps, we would need to make use of something like Bookmap, because you need to go really granular and then just use the actual ladder to work out where you can be involved. I'm also seeing some exhaustion of sellers on copper. Speaking of Bookmap. Actually, let's have a look at that. So here it is. So you can see there are orders here at 0470, kind of peppered in all the way through to the round number of 05 even. And then to the downside, we have an area around 0327, 0330 that could be an interesting area for longs if we're going to run longs through it. Okay. For now, this area is still hanging strong. But this seller exhaustion worries me. So this is an indicator that basically tells you that the sellers are getting exhausted around those levels. And that could open up a possibility to actually run more longs. So we'll see what happens. Right now it's all very confused. But for me, this would be a potential for more longs. So we need to find a good area for that. Do you know the ETA of us getting DAX? No, I don't, but I know that it's going to be within this year. So, like I said before, I think they're having some trouble with the conversion of euros per tick into our USD-based dashboards. And that needs to be done absolutely correctly, otherwise a whole heap of mess ensues. Devin Walker says, hey Dee, I'm in EST and looking to trade crude oil / ES prior to work, catching the Euro session open. Would you recommend setting the IB between 2 and 3 a.m.? Well, that would be pre-market, wouldn't it? Or 3 a.m. to 4? Well, 3 a.m. is the official London Open, so I see no reason why you would put it an hour before. I mean, if you were maybe trading DAX, that opens on Eurex, which is an hour before, but yeah, even for DAX, I use the initial balance from London, because Eurex is such a, like, it's an exchange that matters, but it's a small volume exchange. It's not like, you know, massive. And then when London Stock Exchange kicks in, all the volumes plow in. I actually have a setup called Frankie Fakeout that I used to do quite frequently, usually on like Forex pairs and stuff back in the day. But Forex kind of died a death, so that went out the window. But it's still a valid thing. It's just that it would be more of a scalp. And these days I just, you know, I don't really do that much scalping, even though, you know, you could argue that some of the trades that I do on sort of neutral days where I scalp through the nearby low or high and then reverse the trade for a slightly longer time frame move, those are scalps, right? All right, we're taking out the single prints in copper and coming into effectively initial balance high area. So if the initial balance high proves reactive around these levels, which are still now holding, but if we get an aggressive move through it, these guys will disappear. It's a pretty big seller here. This could be a sign of a failed auction as well, but we still need the price to fail the auction. And if that doesn't happen, they pull it up above initial balance high again. That's still a sustained auction. But if we stay underneath 0350, this is a failed auction now. And a short attempt would be on the cards. I would like to see it go into bearish engulfing. So this is more like sort of railway tracks. So we'll see what happens in 13 seconds. Buyers are stepping in. So now I'm still thinking longs. We still have buyers here. All right, let's go long. Right, I'm now long from 403.70 and I'm targeting ADR high, so going through this little area, so 0572. So this target that I have as a default is a little bit high. Here we go. Okay. So that's the trade. I'm also going to put it on this chart here. so we can track it. Let me change the color here because I prefer white charts when I'm not streaming. So sometimes my colors are actually set for that. And 0300 is a stop. All right, there it is. So really, if we get to the top of this low volume node, I would be happy with that as well. That will mean about a 2R multiples, 2.4R. As always, starting the first trade of the week on a one lot and only using $175. And then if we build some profits tomorrow, I can maybe increase that to 2 lots and so on and so forth. Right, so let's see how this trade works out. There's nothing else for me to do. I don't really go for quick scalps. In this case, this is not a quick scalp. This is a more extended opportunity. So I would like to stay in this for at least 20 minutes, maybe more. My average hold time is 45 minutes. All right, so let's just address Devin's question again. So you say that you want to trade crude oil or ES prior to work, catching the Euro session open. Well, if you're going to catch the Euro session open, CL and ES are really not that great for that session. You will be stuck in trades that don't really go anywhere for a lot of the days. Like we are in a bit of an outlier now where things are moving. But if I look at ES, even today, this entire move is only 72 ticks. So I don't know how you trade. Like I suppose if you're only catching like 30 ticks or so, you might be able to find a trade. But largely, ES is not, it's quiet. And CL also very quiet. Although again, last week was an outlier with a whole bunch of anomalies that were out of the statistical probabilities. However, right now, let me just change some settings here. Crude oil for the entirety of London, we've been open now for over 2 hours and it's done 41 ticks. So that's very painful to trade. Yeah, so for me, the best London market is definitely DAX. I mean, I suppose NQ is okay too, because NQ moves quite well. And even now, it has 620 ticks during the London session. So I would probably try and look at that, because it would be less painful and you can still get 50 to 100 ticks per trade, do a couple of trades in an hour or so, and then go off to work. But CL and ES, they are not my primary choice for London. Michelle Ryan says, can you show how you find the scalp on Bookmap? Well, finding scalps does not start on Bookmap. It starts on a regular price chart with market generated information. So I usually like doing scalps on neutral days, because whenever you get the extension of the initial bounce to both sides, and then the market gets close to those newly created session highs or lows, if it gets to them, it will run through. So that's a scalp that I've enjoyed doing quite a bit. And then I run a reversal trade through the middle through to the middle of the range. So I do a scalp through the high or low, then I reverse when price action tells me to, and then I run that back up to the middle of the range. So I'm just going to try and find, copper is probably not the best thing for that. So let's try finding another option. I'm just thinking maybe crude oil would be a good one. But not for London. We need regular trading hours. All right, so here is an example of how the scalps begin for me. Now, if you're a true scalper, for example, you would be looking at just taking a few ticks and, you know, being out of it. Now, on this particular day, the market was trying to go into a value acceptance, but, you know, this market has been pretty bullish in recent times. And we had the initial balance set. Then we did a failed auction. So failed auction that was a little bit messy, but still consolidation, goes into a neutral day, right? But before it goes into a neutral day, you have this initial balance high set. And because this didn't complete the value acceptance, there was merit that is going to go into a neutral day type, offering you an opportunity for a couple of scalps rather than any longer time frame and longer duration charts. And for me, the longer duration setup here would be this failed auction after the initial balance was set. But once we get to the high of the initial balance, this is where scalps can be found. So the first thing is that you effectively expect the scalp to work out by taking out the previous session high in this case. What I like to see on Bookmap at that point is some sort of orders that are there, but then also to see the buyer sort of assaulting from slightly lower down. So you don't really aim to go at the high, but to go in, how would I put this best? To go towards that high on a pullback. So pull back and then you run it as a long with a view to smash through those orders that you saw that were laying there before. But as the price got to it and created this little pullback here, so the first red candle, that was your pullback, right? So you would enter it long with a view that we do go back up here, we're going to run through it. So that would be scalp number one. And usually how that looks, let me see if I can find, maybe NQ is pretty good. So let's say that imagine that this is crude oil chart. Imagine that the chart that I was just showing you is the same thing we have here. So you see this little zone that has a stack of orders, right? And then we have the run up to it, reversal, and then more buyers stepping in, you enter your long, and then at the point of price arriving back at the former area where orders were, you want to see the orders disappearing, and that's going to lead through to a potential scalp through, right? Sometimes it happens as the price is reaching those areas, and then they kind of start bailing, or they start getting taken out by the opposing party. So it's a very discretionary way to do things. And then I also like to use things like round numbers to see whether we're close to a round number, like on crude oil would be a 0.5, or like 77, 73, 73.50. So round numbers, right? And then you have an opportunity for a little scalp back the other way. So once you run through those orders that were there, typically if it's a neutral day, you will get some sort of a ping back. And for that, I will be using a 1 minute chart. Again, let me see if I can drag one out. And then you look for exhaustion candles. So for that, I use equivolume candles on a 1 minute. And what you want to see is something like this. So you go all the way up, big fat candle, then volume dries up, and then it sort of starts coming back into the former range. Now, the former range, usually taken from a slightly larger time frame, but that's what you want to see. You want to see a scalp through, and then you're effectively looking for more weakness around the former initial balance. So those are some of the scalps that I enjoy doing, but they're not something that is going to appear every day, because you have to have very particular set of circumstances in order for that to happen. So potential for a neutral day type, usually already a neutral day type printed on the chart so that you can run those new session highs and lows as a scalp. But I'm not a core scalper. So if the opportunity presents itself, yes, I will take it. But generally, it's not my core way of doing things. I typically like to grab about 45 to 70 ticks from crude oil. And ES as well. But ES, if I'm doing the power hour trades, that tends to be more scalpy type moves. However, even those moves, they're enormous on some days. Like I've gotten like 120, 200 ticks on power hour, especially when you get the short squeeze, when you get the late failed auction with that short squeeze, and then it just goes. Or they sort of do a failed auction on the other side into the close. Those are actually beautiful, but you do need like positive delta. You need to look at a whole bunch of other things that will lead to conditions that are conducive for those sorts of setups. But ES, I like to trade towards the end of the day. I mean, one thing I've noticed with NQ and all this gappy stuff is that it lost its jitteriness. I don't know whether you guys noticed that too. So I might actually be trading a bit of NQ at some point. Because one thing that really annoyed me was the intra-candle nervousness. Like I felt like somebody gave me something in my drink and then my eyes are just going all weird. Or if you haven't slept for like 3 days and you have sleep narcosis setting in. That's what it felt like to me. But I'm like, the way I'm looking at it now, it's all pretty smooth movement. It actually looks more like DAX moving for London. We'll see what happens during New York, and if the nervousness of the intra-candle movement is not there anymore, yeah, I mean, maybe I'll trade NQ again. Last time I traded NQ as a kind of a regular product was during COVID. So it was a while ago. It was like 3-4 years ago. All right, let's have a look at some more questions. Think Trades says, Gab says, does Topstep have a way to know open interests? I don't think so, not yet, but I think they're working on it. Last time I checked. So you should probably ask Hogue or someone, because he would be more in tune with what's happening. Or Robert Cooney, he will know as well. Think Trade says, I love being able to learn while everything is moving slower. Yeah, that's the benefit of using either slow markets class from Dakota or my London session, because everything is much, much slower. Let me just check something here, because we're going to have to do some plugs as well. Tink Trader says, can you please explain what a failed auction is, or even an auction for that matter? Well, all of this is an auction. In order for price to move up and down, you need the auction process. And the way futures markets began is because the farmers wanted to hedge their produce effectively in light of some unfavorable seasonal conditions or something, and that's how the first markets were created. But all of that evolved into electronic trading that still has a two-sided auction. So for every buyer, you have to have a seller. Now, there is a velocity of orders that comes into that. One thing that when people say, oh, this is a zero-sum game, and people are like, well, but why do you guys then say there's more buyers than sellers if there's if there's a buyer for every seller? That doesn't make sense. Well, you're missing time and velocity of price. So if you have a whole bunch of buyers stepping in much faster than the sellers, that will bring the price to rise typically, and vice versa. So this is where the asymmetric nature of the auction process comes in. So the faster somebody is bidding, the more the price will react, right? And the failed auction refers to two components. So first component is the first hour of trading, which is the initial balance in profile. So that's all it is. First hour of trading, the high, the low. And in fact, anytime I write any sort of algorithms for myself, I will typically define the initial balance, not by saying this is the initial balance, but in code, everything has to be simpler. So I would say find time frame, date time from let's say 8 to 9 for London, and then I would name that as a variable initial balance. But then I will also, in some other ways, if I just can't be bothered to name variables, I would just be like, oh, first hour of trading, that's it. And then once that's set, we can then look to see whether the price is exiting that range or whether it's staying inside it. Once the price exits that range, there is a potential for a sustained auction away from the initial balance area. So now you know that the initial balance is the first hour of trading. On my charts, you can see that as a red box, and then you can see the extensions of the initial balance as blue lines, right? So this blue area. So when we say a failed auction, it typically means that the price tried to exit the initial balance, but then couldn't really find any buyers outside of it, and then failed to advance further, reversed the price, and fell back into the first hour trading range, into the initial balance, ergo failing the auction. Now, typically for me, I've gone one step further in my Marcus Stalker's method to define conditions for an auction fade versus the failed auction. Now, what's the difference? The difference is in the amount that the price has moved away from the initial balance. The true failed auction shouldn't really spend much time outside of the initial balance at all, right? It should try to find business, fail, and pretty much come back into it within like 15, 20 minutes. But if that doesn't happen and you get a committed move away from it, that either kind of doubles the size of the initial balance range. So you have, let's say in copper, you have about 19 handles for the initial balance. Well, if that extends all the way further, that and then starts to fail the auction effectively. I call that the auction fade because it's not failing the auction, it's fading this previously successful auction. So to me, those are two very different things. And Hogue has actually adopted that as a terminology now as well, which is mind-blowing to me. But yeah, I hear him say, oh, this is more of an auction fade, blah. And then somebody asked him on group coaching once, oh, can you explain the auction fade? And he says, well, that's really Dee's concept, but from what I can tell. And then he exactly explained it as I imagined it. The thing with Hogue and me is that I've learned from him. And then because we have this like common language of understanding the auction and everything that happens around it, he can very easily figure out what it is that I'm trying to say. So as soon as I told him auction fade and I said, it moved pretty far from initial balance, that was the only thing that he needed to figure out why I named it the auction fade. And then he perfectly explained it to the person that was asking. So it's like, it's just mind-blowing. So yeah, I love Hogue for that. He's just so good at explaining things, and I wouldn't have my skills if it wasn't for him. So yeah, the auction fade means moving away from the initial balance and then sort of finding some opposing party that steps in. And the difference between the targets for those two setups, so the failed auction versus the auction fade, is that the failed auction has a target at the opposite side of the initial balance. So wherever it came from, we're expecting the price to rotate all the way through it. But for the auction fade, you need to ensure that the move away from the initial balance is big enough. Why? Because the target for the auction fade is the nearest initial balance edge. So in this case, if we move higher, then start to fail the auction somewhere up here, the target would be IB high, not the opposite side of the initial balance. So hopefully that makes more sense now. I try to simplify things as much as possible, or before I go into the meta language of profile, that I set up the terminology. You know, first hour trading, aka initial balance, and so on and so forth. Big swinging ticks. Okay. I made sure to enunciate the T there. Do you mind looking at gold, please? I don't mind. Let's have a look at gold. I just need to load up a template. I stupidly switched off the computer by accident, and I lost some of my templates. Because we're doing some work in this room, and yeah, things happen. All right, let's start from the large time frame bird's eye view. As always, let me make sure that you guys can see that. Yeah, this is what I mean by templates. So I've lost. Yes, this went back to default rather than my setup. Just need to change one more thing. There we go. Okay, that's better. All right, gold. Overall bird's eye view chart. So this gap is due to a contract change. CQG for some reason didn't track this because they figured out late that we rolled into December. But basically we are sitting kind of in the middle-ish of the weekly range. A lot of volume in this area. So really, one of the areas that I might want to look at a more granular level will be this area here. Maybe even this little area there. Okay. And then to the top side, we do have some lower volumes where these spikes are located. So you can see that spiky, spiky, spiky. It means price did not spend much time before getting away from it. That's always a sign of pretty strong moves. Committed movement that just steps in, takes the price away from it. All right, looking at supply and demand levels on the daily chart. We have a fairly well-defined swing. Gold has been a little bit sluggish on intraday timeframes. But yeah, so right now, sort of in the middle of everything. These would be my points of interest. So this area here, 2446, 2460, and then further up at 2495 is kind of like the big orientation point. So if the price gets there, you need to take a more granular approach there. But until we get there, there's not much to be seen from this particular chart. Okay. I'm just going to drag out something. Give me a minute. All right, so 4-hour chart. So nothing much to see on the daily chart. 4-hour chart arriving into some localized area of supply. So, yeah, longs into areas of supply on a 4-hour chart, not the best, because I see somebody's long there in the chat. But let's have a look at it from a intraday time frame level. So we've gone higher than the Asian session, but now we're struggling. So it's not staying above the initial balance, and in fact it's returning to the initial balance and spending time in it. So we already tried to go higher in the previous period, so in C period, and D period now is still struggling to go higher. So depending on how this closes, to me this smells of a range bound day. Because if you were going to have a momentum trade, it's not this slow. Momentum trades have momentum behind them, right? So if you don't have momentum, you need to doubt whether this is an actual momentum trade. You can have a slower auction upside, but this to me looks like it's slowing down. So we'll see. Where is the previous high? We are above Friday's high. If we come back to 2476, that might be a nice area for a pullback to go into further longs, if that's what you're thinking. But I wouldn't be necessarily going long in this area. So that's my take on gold. Right now, we're not at any large time frame decision points yet. So all of your decisions would need to be taken from some more intraday levels. And I'm just going to have a look at something else. Let's go overnight VWAP. Yeah, and because we've moved away so much from VWAP, look at the standard deviation bands as well. It's kind of going into the second standard deviation zone and it's kind of drifting into it. So if you compare that to a potential for a failed auction in this session, pullback might be coming. And I'm basing this analysis purely on where the initial balance is and where the price is in relation to the initial balance. So copper is different because we're above the initial balance. I mean, this could also go into a pullback, but so far the initial balance is still holding things. We also have the point of control that is now moved to the edge of the initial balance. So if I go back, point of control was a little bit lower at 403.30. And now it's right at 403.50. So that means point of control slightly moved higher. So until that starts moving lower, longs are still sort of on the cards. That's like a more granular approach to what's going on. And gold, well, it's struggling, right? Initial balance is between 24.82.6 and 24.74.3. And for now, it's just every time they pop up, somebody sells it. Every time they try to pop up, somebody sells it. So yeah, we could have a pullback. Mean reversion down to at least Friday high. Now, alternatively, if this does keep going higher, you have to always take the other side of the story too. You have the decision point at 24.95.8 from that bird's eye view. We also have the average session range high up there. So if the price gets there, that might be an opportunity to fade this move. So one thing that we can then come up with is like a story. So we can have a pullback down to 24.76.6. Then another bounce, maybe in the form of a failed auction for COMEX or something. run up all the way to the next decision point at 24.95.9, and then maybe another fade away from that. That would be like perfect scenario. That would be conducive to this uptrend that we've been seeing in gold. So yeah, maybe now failed auction down to Friday high, and then wait for the next session before more moves. So hopefully that helps, right? Okay, let's see if we have any more questions, and if not, then I'm gonna sign off. Okay. Hi, Deeyana, looking gorgeous today. Thank you. I woke up and put on some makeup, so that always helps. Can you please let me know how do you manage current trade? Right now, there's nothing to manage because it hasn't even moved anywhere. So for now, it's just there. It's hanging around the entry. And until the price closes back inside the initial balance, there's nothing to do here. And if that happens, I have my stop loss, so I will be taken out anyway. If this carries on higher, there is still nothing else for me to do, but I will time stop this. So if we take forever to get somewhere, this is a pretty early trade for me. So I will be cutting that off in about 90 minutes time if we're not making much headway, and even if we haven't reached my target that I intended to have for this particular trade, I will cut it. And even if it's just sitting still at this level, slight drawdown, I don't care. I will cut it because the time for that trade has run out. This is an early trade. I have effectively 3 sets of time-based stops for the trades. The first one is if I'm doing an early trade and I'm kind of doing a gap fill during the initial balance or something like that, I will cut off those trades 2 hours into it if they don't reach target. If I then do this sort of trade, so slightly later, based on initial balance extensions, I will then keep that until my midday. If I kick off a late overlap trade from about 11:30 a.m. my time, all the way through till like just before COMEX, I will cut that off at COMEX start or earlier if we have some news that might put a wrench in the works. So that's a time stop management. That way, you're not over managing trades based on price action. So I have one price action, failure of the auction. That will get me out of that trade. The rest of it, all time based. It gives my trades time to work. It's a very different way. Like if you were there for Nick Fortick's session yesterday, and if you've ever watched him trade on fast markets and stuff, you know that he's a very quick scalper, and that works for him. But every time I do a quick scalp and it continues, I'm always like, why did I exit? And then I start doing stupid things. So scalping, when there's a bigger opportunity for me, doesn't work. And you have to find your own way of doing things. But over managing trades in any condition is a bad thing to do. So having a time-based stop has actually worked for me really well, to just let the trade do whatever it's going to do. Obviously, that's based on statistics. It's not based on, wishful thinking and me just going, well, I'm just going to let it do whatever. I don't care. No, it's based on observed events that I've lived through, thousands of times before. Now, that's not to say that I don't make mistakes or that we can't have anomalous statistical events. Like all last week, everything was an anomaly. But generally, over time, those probabilities tend to show up. So all you need to do is try to keep your discipline and weather things out. But yeah, time-based stops have been amazing for me personally to stop over managing my own trades. Ronnie says, do you use initial balance for London session? If so, what hour do you use? 8 a.m. till 9 a.m. my time. That's the initial balance for the London session because that's where London Stock Exchange begins. Pi says, this is the first time I've ever understood the term failed auction. Thanks, Dee. You're very welcome. Tink Trade says, awesome explanation. Thank you so much. That's been bugging me for a long time. All right, cool. Guys, this is going to be it. Let me just see whether I've got some plugs to do. So, new programming. We've got some new programming. We've got starting today at the buzzer, catch Coach Jay Monday through Friday from 3:15 to 4:15 p.m. Central. And then last night, I don't know whether you watched, I was there to watch. I was in bed, but I wanted to be there for him. So Nick Furtick has his own segment now on Sunday evenings, Market Kickoff with Nick Furtick, starting at 4:45 p.m. Central every Sunday. So he's so cool. I love listening to him. He is very analytical and very similar to kind of what I do, but he's got a completely different way of trading. So that's pretty awesome. Now, obviously, we have Dakota doing his slow markets as usual. He now starts streaming from 7:30 p.m. I also want to say that on Thursday, I'm going to do a special extended London session. So Bruno, I'm going to need you here for the 2 hours. We're going to have Captain Mickey joining us for a special edition to talk about his approach to trading NQ. I'm super excited to have him on because he also has a very statistical approach. So he can only join me from effectively 10:30 a.m. because that's when he starts his day. And so we're going to have my regular segment for an hour, and then we're going to get Captain Mickey to come and join us for another hour before he has to go do his regular full-time job. He actually works for an institution, for a financial institution, and he did manage to find like a loophole where he can do Topstep accounts as well. So he's been killing it recently, and I absolutely love his story, but more importantly, I want to pick his brain. I want to dig into his strategy because he has this way of looking at previous session, sort of 50% of the session, and I just want to dig into the granular intraday analysis that he does and how he comes up with his levels. I'm stuttering, need more coffee. All right, guys, so that's all for today. Obviously, we have the fast markets later on, so join Nick Furtick and the gang, MP, probably Andre and Hogue, all the usual suspects. I will be back on Tuesday for the London session, Wednesday for the fast markets, and then Thursday, that's another change, I've got my market Scalping with Dee. So we changed it from Tuesday to Thursday. That is it, I think. I'm going to babysit this copper trade for a little bit. And make sure to take it slow today because we have Monday weirdness happening here. Although, it's not that volatile. But, that dome on NQ was still a little bit gappy. So don't dig a massive hole for yourself immediately in the first sort of 10 minutes. Take a breath before you decide to do your first London trade. Make it a good one. Don't make it a Muppet trade. Until tomorrow, I'm signing off. Thank you for being with me. Make sure to like and subscribe to TopstepTV for more trading and more tradertainment. I will see you guys tomorrow. Goodbye.